President Trump this week sparked headlines after suggesting that he may support eliminating the federal capital gains tax on home sales. This would be a dramatic change that could reshape the real estate market for the first time in over 3 decades. Speaking from the Oval Office, Trump said that his team is, quote, thinking about the idea, calling it a potential catalyst to, quote, unleash the housing market. Currently, U.S. homeowners benefit from an exclusion on capital gains when selling a primary residence, up to $250,000 for single filers and $500,000 for joint filers. These limits haven't changed since 1997. With home prices having soared over the past 2 decades, many Americans are now bumping up against or even exceeding those thresholds. Georgia Representative Marjorie Taylor Greene is sponsoring legislation to eliminate the tax altogether, calling it outdated and unfair. She says homeowners who've lived in their homes for decades, especially seniors in high-growth markets, shouldn't be forced to stay put because of an IRS penalty. Of course, she's now calling attention to her No Tax on Home Sales Act as a way to free up equity, to increase housing supply, and of course, to support financial security. According to a recent study by the National Association of Realtors, there is data to back that up. The National Association of Realtors found that over 29 million Americans, or 34% of homeowners, would exceed the $250,000 threshold if they sold their home today. Another 8 million joint filers would surpass the $500,000 mark. These households face what the report calls a stay-put penalty, where older Americans are disincentivized from selling, from downsizing, or relocating to be closer to family. So the result of that is, of course, lower turnover in the housing market, tighter inventory, and higher prices for everyone else. The National Association of Realtors Chief Advocacy Officer Shannon McCann says the policy is, quote, quietly distorting the housing market and getting worse every month. Fewer existing homes on the market means fewer opportunities for younger people, for first-time home buyers, and it does push affordability further out of reach. But believe it or not everyone is on board with that. Critics argue that eliminating the capital gains tax on home sales would disproportionately benefit wealthier Americans. Joel Berner, for example, recently commented on this, and he is a senior economist at Realtor.com. He noted that most families already fall under the exclusion limit that exists currently. He says unless your home has appreciated by more than $500,000, this won't move the needle much. For owners of multi-million-dollar homes in markets like San Francisco, New York, or Miami, it could mean massive tax savings. And while it could increase housing inventory in the short run, he says, it might attract more investor activity, especially from speculators who are looking to profit from flipping homes tax-free. This could push home prices even higher in those markets, he says, and it could worsen affordability issues in the long run. Already, nearly 27% of all homes sold in the first quarter of this year were bought by investors, believe it or not, the highest level in at least 5 years. There's also the matter of lost revenue. Capital gains taxes on home sales contribute billions of dollars to federal tax revenue every single year. Eliminating them would mean less money for government programs or shifting the burden elsewhere. So what does this mean for regular Americans? What does it mean for you? For homeowners in high-growth markets, particularly those who bought decades ago and have seen values skyrocket quite literally, eliminating the tax could provide more flexibility and, of course, it could provide cash to downsize, to relocate, or pass wealth to their children. For younger buyers, it might mean a slight increase in available homes, though prices could, of course, climb if investors flood the market. And for policymakers, it raises a fundamental question. Should home ownership in the United States be treated as a nest egg that the government helps grow and protect, or should it be treated as an asset that is subject to taxes like any other investment? Whether Trump's idea becomes law is still uncertain at this point in time. I think it is a great idea. However, one thing is clear right now. In today's housing market, any change to how homes are taxed could have ripple effects across generations, for better or for worse. Comment below and let us know if you are for or against this potential change in tax code. I would love to hear your thoughts on this and to hear your opinions. Remember to subscribe to my channel and give this video a like if you found it interesting. Stay tuned for more, and I will see you back here soon. Bye for now.